Good morning, everyone, and thank you for joining us today. It's great to see so many professionals taking the time to understand the latest developments in the UAE e-invoicing. On behalf of the Premier Brains Global, I would like to extend a warm welcome to all attending this webinar. We truly appreciate your time and interest in this important topic. Before we begin, I would also like to briefly acknowledge the current situation in the UAE and the region. While there may be ongoing challenges affecting people and communities, the UAE has always demonstrated resilience and strong leadership during such times. We remain positive that the things will settle down and will be back to normal soon. Thank you all again for joining us today. Let me briefly introduce myself. My name is Aishwarya, and I'm part of the VAT advisory team at Premier Brains Global. I am a qualified chartered accountant, and my professional experience includes internal audit, financial process reviews, and regulatory compliance across various industries. My work primarily focuses on UAE VAT advisory and internal audit. Before we dive into the session, a quick introduction about the organization hosting today's webinar. Premier Brain Global, or PBG, is a UAE-based professional service firm providing audit, tax, accounting, and advisory services. With over 14 years of experience and offices across Dubai, Abu Dhabi, Oman, and KSA, the firm supports businesses across a wide range of industry. The firm has over 100 professionals across the globe, supporting the organization with regulatory compliance, financial advisory, and business transformation service. Over the year, the firm has worked with a diverse portfolio of regional and international clients across industries such as real estate, retail, logistics, education, and financial services, including organizations like MR, Apparel Group, GEMS Education, Policy Bazaar, Ecolog, and DP World. PBG is also a member of Audit Trust, a global network spanning over 100 countries, allowing us to deliver internationally aligned professional services while maintaining a strong local understanding of the regulatory frameworks. Our focus in today's webinar is on providing practical, technology driven solutions that helps the businesses remain compliant and future ready, particularly in areas such as tax transformation and digital reporting. Now, it's my pleasure to introduce our speakers for today's session. First, we have Mr. Sanjay, a chartered accountant who brings extensive experience in tax advisory, regulatory compliance, and digital transformation in tax systems. Sanjay has been closely involved in advising business on emerging regulatory developments and technology driven compliance frameworks, including areas such as e-invoicing implementation and digital reporting requirements. Through his work, he has supported organizations in understanding regulatory changes and preparing the systems and processes to align with evolving compliance requirements. Joining him today is CA Sahil Kalyani, an associate chartered accountant and certified public accountant Australia with over 5 years of professional experience. Sahil specializes in risk based internal audits, internal control reviews, compliance assessment, and tax and technology driven solutions, including e invoicing frameworks. With that, I will now hand over the session to Sahil, who will walk us through the latest MOF guidelines and what they mean for the businesses operating in the UAE. Over to you, Sahil.
Thank you so much for the context setting, Aishwarya. Welcome everybody. Good morning, and this is the broad agenda we'll be talking about today. The overall framework, implementation timelines, scope and exemptions, practical business implications, and how organizations should prepare for the upcoming changes. We will also discuss real world use cases and practical scenarios to help you better understand what these changes really mean for you. And at the end, we'll open the floor for a Q&A session. All attendees are requested to drop their questions in the chat box during the session. Um, Let me start with the basics, and then we'll dig deep into the details. Firstly, the timelines for invoicing implementation in the UAE, as you may all know. The rollout will take place in three phases, targeting different types of entities based on their size and nature. First, phase one focuses on large enterprises, specifically businesses with annual revenue of AED 50 million or more. These businesses are required to appoint an ASP, accredited service provider, by 31st July of this year, 2026. And the actual implementation of e-invoicing is expected to go live by 1st January 2027. The second phase covers small and medium-sized enterprises, meaning companies with revenue below AED 50 million. These organizations must appoint a ASP by 31st March 2027, with implementation required by 1st of July 2027. The important point to note here is that the Ministry of Finance has only allowed a 6-month period extra for the small and medium enterprises for implementation as compared to the large enterprises. And the interesting fact to note here is that the Ministry of Finance has not set any floor limit yet, which means that even if a business is making a sale of 100 dirhams, it will be covered under the phase 2 of e-invoicing mandate. Finally, phase 3 applies to government entities. Government organization must also appoint their service providers by 31st March 2027, but they're also given a 6-month extra period for implementation, and their deadline is 1st October 2027. One important point to highlight is that B2C transactions are currently exempt from the mandate until further notice from the Ministry of Finance. Overall, this phase approach allows businesses and government entities enough time to prepare the systems, select service providers, and ensure compliance before the mandatory dates. Um, yeah, thank you. To better understand how e-invoicing systems operate globally, it's useful to look at the two broad e-invoicing models adopted by the government. The first is the centralized model, that is also known as the clearance model. In this model, all invoices must pass through a central government platform for validation before it is sent to the buyer. This model currently operates in the KSA, the Saudi, and also in India. The government either stores or validates the invoice data before it is legally valid. So this model provides strong control and monitoring with the government, and it is often easier for the tax authorities to manage because everything goes through a single portal. However, it can also create risks such as system downtime and high infrastructure costs for government if since it is maintained on a single portal. So if there is a technical downfall, so it can really harm the whole system. The second approach is the decentralized model or the reporting model, which is the model that UAE has chosen that we'll be talking about today. Here, invoices are exchanged between businesses using a authorized private platform known as the A Credit Services Provider, as I mentioned previously. Instead of validating every invoice centrally by the government receives relevant invoice data through this whole reporting model through the ASPs. And this approach provides more flexibility, more resilience, because multiple platforms can, coordinate and operate simultaneously. However, it also means that implementation can be slightly more complex as business must integrate with ASPs and comply with all the regulatory requirements. Now over to Mr. Sanjay to discuss the whole topic in greater detail.
Thank you, Sahil and Ashwarya, for setting up the context. And good morning, everyone. And I hope you are all doing well and safe. And we are hoping and touch wood that things will get normalized very soon. I can see a lot of traffic today. So coming back to the framework, as Sahil has mentioned about the two broad model, the centralized model or the decentralized model, or you can call it like a reporting model versus clearance model. As we now all know that PayPal 5 corner model is very famous in UAE businesses now, but still those who are first time joining the understanding the concept here is that like there are 5 parties are involved for the e-invoicing communication in the UAE. This is famously known as a PayPal 5 corner model. To explain this complex chart, we normally use the like example of the how the mobile communication and technology works. So just to simplify that whole the complex the data flow here, let's say if I need to make a phone call to the Sahil, so I need to dial the his phone number through my mobile, and then that call will not directly go to his mobile. It will route it through the two service provider. Let's assume the my service provider is Etisalat, and the service provider of Sahil, the telecom service provider of Sahil is due. So how it's gonna work? The moment I dial the his number, it will go and connect to the nearby Etisalat tower. From Etisalat tower, it will figure it out. Okay, it is for the do. So it will switch the signals to the do tower, and do towers then again will switch the signals to his mobile phone. If you see in this whole context, there are already 4 parties are involved, which is myself, Sahil, and the two service provider, which are Etisalat and Do. And if you know in any communication, there are also monitor and reviewed by the Telecom Regulatory Authority. That's where the fifth corner comes in. Here it is when we comes talk about the e-invoicing. It is in the FTA or the tax authority. So to now here corner 1 and corner 4, what you're seeing in the scheme, this is nothing else. You can talk about Sanjay or Sahil or the two taxpayer. You can talk about supplier and buyer. So moment you raise the invoice, it will be picked up by your service provider or your access point, and it will pass on to the service provider or the buyer, and it will also pass on the service provider to the corner file in the electronic format, and it is called as the XML format. So this is the how the broadly this chart is been explained. And there are certain complexity about this chart. What will happen if, let's say, that your company is part of the phase one, but buyer is in the part of the phase two? That all the complex scenario we will cover in the subsequent slides. But in this entire the communication, there are 2 points I want to mention it here. The single transaction will get reported to the corner file, which is FTA by the both the service provider. What I mean is that it will be reported by the corner 2 and corner 3. So the same transaction will be reported by the both the ASP from the both the side. Second is about the central data warehouse. You can see this is also in the one of the central data warehouse maintained. This unofficially it is called like corner 6, where all the data related to VAT, your corporate tax, transfer pricing, maybe in the future custom also will be integrated and kept here for the any analysis or analytics by the government here. So this is the framework. There is a certain responsibility have been now already been issued in the guidelines. So to just to briefly tell you that the calculation part, when you talk about the content of the invoice, is the responsibility of the seller and the buyer. So I mean the ASP service provider and FTA will not validate the rate of pricing and your contract quantities and all. So that already responsibility given to supplier and buyer. But how the encryption happened between the supplier and buyer, that the responsibility has been given to the ASP. There are one more thing I want to talk about is the who is going to get the, let's say, the PayPal identifier number from the buyer. So it's the responsibility of the supplier or the seller who needs to get this information to feed into. And now, as I mentioned, the one single transaction will get reported to the service provider by service provider to the FTA. They will also generate one of the unique number. It is called UID for every electronic invoice, which reaches to the service provider and to the FTA. So that would be one unique ID would be available for each single sales transaction. So that in future, if any audit comes in through that unique identification number, we can track that information and provide to the authority for any audit or any queries comes in later on. So with the this is a simple example. I think they are now, I think already mentioned that currently we are now only implementing B2B and B2G transactions. B2C is still not in the picture. They have not identified, they are not informed when it's going to come in. But broadly, the understanding is that B2C will also will be implemented in UAE. So just give you the in comparison to what happening in Oman. Oman has already announced the e-invoicing, the similar model, the PayPal 5 corner model, but they have even also adopted the B2C in the phase one. The implementation phases are there different. They have first picked up the top 100 taxpayer, wherein all type of transaction, whether it's B2B or B2G or B2C, all will be part of the e-invoicing. But UAE, we had a different mandate. So that's the, and even Saudi Arabia. In Saudi Arabia also, they have implemented even B2C is also part of the regime for the e-invoicing regime and the mandate. So idea here is broadly is that B2C will also will come in the phases. So whenever you are implementing e-invoicing solution, make sure that think about the future. If you have any many B2C transaction, so ensure your service provider, your taxation or your technology service provider has the understanding and expertise on the B2C implementation as well. One more thing is like sometimes the e-invoicing also would be like considered as a the e-invoicing is meant for like if we somebody uploading the invoices on the portal. But I think by now I think most of us understand it's not kind of uploading the PDF file or invoice copy or kind of JPG or picture images. It is through data exchange happening between the seller, buyer, and the FTA through ASP in electronic format, and the format has been defined as XML format. As I mentioned, here footnote also that even goods and services supplied to even government entities through contract tender are subject to electronic invoicing. So there is no exemption that only. The only exemption at the moment is only B2C or G2C. And even, yes, if it last consumer, if it issue any invoices to businesses, government and consumer, they also kept outside the preview of the e-invoicing at the moment. There are certain specific exemption also been given. First is the word government entity. They are not into commercial activity. They have been given exemption. But most talk about exemption is about the airline industry, where if any airlines company issues a ticket baggage for the some kind of changes, charges for the baggage, for meal selections and all, for those services, the airline industries or airlines companies may not require, need not to require to issue the e-invoicing. Further, airline industries also given the 24-month exemption if they are issuing, they are into international cargo transportation. Further, I will stress this is only temporary exemption for 24 months. After that, even airline industry, if they are doing any cargo transportation business, they need to issue the e-invoicing. Further, they mentioned that some of the financial services exempt or GGO rated, which are already part of the, as per the UAE VAT regulation, is kind of exempt or GGO rated, they may not fall into the e-invoicing, such as the interest. Let's say in the bank charges, if there is a VAT is applicable, but if the bank issue the any interest cost invoice to the customer or the client, they so that's already outside the preview of the VAT. So same thing will apply here as well. So the e-invoicing would not be mandatory. If I talk about the insurance company, there are certain insurance product we know that they are already part of the VAT. Let's say your car insurance, your health insurance policy. So in that case, the e-invoicing would be applicable. But when it comes to the life insurance policy, as we know, the life insurance premium, there is no VAT, so e-invoicing won't be applicable. One more thing I want to talk about here is the bottom line here is any company who are doing the business in UAE, they need to, irrespective of their VAT registration status, they are fall into the electronic invoices or e-invoices. These are the only exemption given by the authority at the moment, and there is a few more exemption I will talk about in the subsequent slide. Yeah. So recently the guidelines were issued last 2 weeks back, where they mentioned there are a lot of intra-group transactions happen within the same group or same company. So what they're talking about for those intra-group transactions, there are 24 months grace period has been granted from the starting from January next year. So there, let's say the intercompany, there are management fee or there are intercompany purchases and sales for e-invoicing would not be mandatory. Or what they're saying is there are grace period has been given for the 24 months. If you really want to adopt even for those transaction invoicing, this is welcome move. But what they're saying is because there are a lot of intergroup transactions, they need to comply with the transfer pricing regime and so on. So their temporary relief has been provided for 24 months after giving the 24 months of the grace period. There one more specific scenario they mentioned in the recent guideline is about investment and holding company. If they are usually like getting any passive income, like a dividend and interest, and they are not heavily involved kind of any kind of a commercial activities, for those transactions will not fall into the e-invoicing as well. So that is also kept it no. So UAE non-established person. Yeah, that's a very interesting. The announcement that came up. If there are foreign businesses, they are non-resident. They don't have any place of business or residence here, but they are providing the services in the UAE. They are also now required to issue e-invoicing. So some of the example could be the foreign supplier, foreign, let's say the IT company, they are providing some software solution in the UAE on a SaaS basis. So they are required to mandatory to go and issue the e-invoicing now going forward. There's a few myths and facts we'll touch base here. So free zone companies are exempt. So this is a myth. I think even the free zone company, irrespective of the place where the businesses are operating, whether it's mainland or free zone, it would be taxes. E-invoicing would be mandatory. Now, as I mentioned, it's not only about the VAT registered businesses are in the scope. As we know, the UAE is the hub for where the billions of dollar transaction done through the trading activities here. but material never arrives in UAE. Importing from the Africa or West Africa or exporting to China or vice versa, all the transactions sometimes routed through Dubai-based entity. In those cases, even though those transactions outside the VAT scope, but still companies are now required to issue e-invoicing. So e-invoicing is not only about the sales invoices, even though if you have any purchases, those also now required to be reported through your ASP to the FTA. So e-invoicing applicable to both the your processes, sales, AR or AP, and required to be compliant with. ERP vendor will handle everything as I mentioned. Now, as of now, we have all the 16 plus specialized companies. Those are mainly into the e-invoicing solution, either in UAE or the Middle East or the worldwide. So the ERP vendor will help you in the modification what is required for the e-invoicing mandate. But companies are now mandatory now required to appoint a service provider as per the deadline given by the authority. The manual PDF invoices are banned, so that's not the question at the moment. So manual and PDF invoices, we can continue to keep on issuing it. But what is the mandatory is now the e-invoicing is now mandatory. So that is companies are now required to redesign maybe their processes. And what I see personally in the going forward in future, company will stop issuing even the PDF copies because the companies may not require to or may not have the bandwidth to handle two different processes for the purchase. Let's talk about. So you once the moment you get your purchase invoice through e-invoicing mechanism, you will not ask a supplier to send you PDF copy in the going forward in the future. So, but at the moment there is no ban of the manual PDF invoices. You can keep on issuing it a PDF copy or the manual invoices to your client or customer. There is no restriction to that. But what is now coming up is the mandatory compliance with the e-invoicing. Imports are excluded. Yes, answer is yes. Imports are really excluded at the moment. Where we need not to report it. But if the companies are in the importing from the PayPal enabled countries, such as let's say in UAE, we have the PayPal framework for invoicing, and if your companies are importing some of the items from the PayPal enabled country, let's say in Europe from Italy and all, so you can ask a supplier to send the invoice through PayPal framework rather than you are getting it through manual PDF version. So that's depend on the taxpayer or the buyer how they want to automate their purchasing processes. Again, the advance payment cannot be handled through the manual invoicing. That again needs to follow the e-invoicing solution, and this also is mandatory as per the VAT. Also, we need to have the tax invoice. Same will go with the e-invoicing as well. That's the very interesting. So, when it comes to the e-invoicing, there is no group concept as such. Each and every legal entity of the VAT, if it is part of the VAT group, need to independently apply and comply with the e-invoicing mandate. So there is no kind of a group concept here. Let's say we have seen in the corporate tax and the VAT, we have the group concept. But when it comes to the e-invoicing, the threshold what Shahil has mentioned initially, it would be applicable to each and every legal entity. If your any legal entity is having a turnover of more than 50 million independently, then only they will fall into the phase one of the invoicing. This is part Sahil has already covered that FTA will not validate and approve any earning invoices. This is the not a clearance model. It's in UAE we adopted the reporting model where FTA will get the information through ASP and acknowledge or the receipt of that invoice. So there is no validation happening. It's not like Saudi Arabia or India where each and every invoice first get cleared by the tax authority, digitally signed and send it back to the supplier. So here is decentralized model as Sahil has covered earlier. Yeah, so there is people have started asking the question: do we really require to maintain and retain the data? Because going forward, all the data will be in the with the FTA and the tax authority. The answer is yes. At the moment, we still need to maintain the data for 7 years as per the corporate tax law and 5 years per VAT law. So there is no exemption as such. But what we see in the future, if down the line, if you talk about medium to longer run, the business will be need not to keep the data as such. But at the moment, it is mandatory. Invoicing is not only the most of us like to link this invoicing directly with the VAT compliance, but what we're seeing it now, this is much beyond the VAT. First, as already I mentioned, there are business houses, they don't even VAT registration number. They still need to comply with the e-invoicing. Second is now government, as I mentioned, they are going to have the database where they have not entire uh, corporate data when it comes to about a tax alignment, transfer pricing data. Because you think about the where the government has such a database where your corporate tax, VAT, transfer pricing, and custom data will also integrate. So the e-invoicing is something the step towards the digitization of the economy, paperless economy. So there's a broader vision. It's not just about the VAT compliance. So what may happen is that based on the database, the government will start automatically, analytically analyzing your data, and they will start issuing some sort of notices on any discrepancy or any disparity between the data maintained by the businesses. Let's say your data as per the VAT return or VAT data as per e-invoicing or data or your revenue as per your corporate tax, if it is differs, to automatically the e-invoice notices might come from the FTA to give the answer or justification for any variation between the data reported in the different channel. E-invoicing will be disruptive and costly. I say the e-invoicing is a step toward the digitization. Disruption, yes, this is a disruption the way the businesses work. Uh, as I mentioned earlier, at the moment, the B2C is still not applicable, but time will come where moment you go out and buy from any grocery shop or you buy anything from the coffee shop, the time you punch your card, it will report it to the from point of sale to the FTA. They have not yet announced a B2C transaction, but yes, it is a disruptive in terms of the how the data is handled and reported to the FTA. These are the 51 mandatory field already been announced in the FTA. This is the standard 51 field is required in the each and every tax invoices. So one thing I want to clarify, this 51 field required to be maintained electronically in your software, ERP or any other accounting software. It does not mean we need to get printed version of it. It doesn't require that all this data field required to be printed in a PDF file. Second is these are the only mandatory field, but business to business we may have some additional conditional or non-mandatory field as well as if required by the businesses. Will I have like one use cases where we need some additional information? We'll cover in the subsequent slide. These are the sample tax invoices issued by the FTA covering all the 51 fields. If you can see, this is just for your just glance, we have mentioned it, but it doesn't mean we need to print everything like UID number also there. This is a unique ID number, but doesn't mean we need to get printed in same fashion and give it to the buyer. We can still keep on doing it, but we're doing it in line with the VAT compliances. But when it comes to the UAE invoicing, this all required to be provided to your ASP in electronic format. Okay. As per Active, there are 16 use cases where the e-invoicing would be mandatory. The 16 use cases, every business now needs to review their internal VAT ecosystem in terms of the sales and purchases and see what are these use cases, how we are aligned with the now new requirement. So this every business cases need to analyze each and every use case in terms of their line of the business. If some businesses may have the applicability to all the 16 use cases, some may have less. But idea here is we need to most likely to comply with all the 16 use cases and go with a deeper dive into this in detail. Okay, this is some practical scenario as I told about in this one. As we've seen on the previous slide, there are 51 slide field were mandatory. Let's say, but in the free zone company, we have any sales where your buyer is your beneficiary of that particular transaction is different than your buyer. So, but at the moment, if I take it back to the slide, there is no beneficiary information in the mandatory field. Yeah. So in this field, there is nowhere it is mentioned about the only buyer details is there, but about your beneficiary in the free zone transaction is different than the buyer. So that will be the additionally buyer beneficiary detail will be required, and that will become the conditional field. So this all kind of transaction required to be analyzed for a business from their applicability perspective, and when and that all is part of your discovery phase or impact assessment gap analysis perspective. So when any ASP comes in, they need to review all your business use cases and accordingly design the solution for you. It may not be 100% replica of the what has been done for the other businesses. It depends on the business to business and use cases to use cases. Uh, Now, second very much is about buyer not yet implemented e-invoicing. Like Sahil has mentioned, there are two different phases for the e-invoicing implementation. First is 1st January, another is July 2027. So now in 6 months, let's say your buyer does not have any e-paper ID at the moment, but you start making the sales to that buyer. So where the transaction will get reported. So what the government has given, government has already given the default endpoint. So the transaction will be parked it under this endpoint in the electronic invoice. Let me go back to the slide and explain you how it's going to happen. Yeah. Let's say your corner one is, let's say your company is part of the phase one. When you raise the invoice, you are above 50 million. You raise the invoice in the 1st January 27, but your buyer is still part of the phase two. They will start e-invoicing from the July 27. So in that case, they have not appointed a service provider. So the question comes to how the invoice will flow in this ecosystem. So what I was explaining is the seller will issue the invoice. Seller service provider will fetch the information, pass on to the FTA. So that ecosystem will work continuously, but they cannot pass on to the corner three because as said, there is no ASP from the buyer side. So it will be parked the in default ID provided by the FTA. And the same ecosystem will work for the export also. Let's say if you're exporting your any item or services or business or material, but for that buyer is not part of the PayPal network, right? So again, there is a dedicated ID provided by the FTA that will be parked here. But in terms of the other reporting to the FTA will continue. The seller, the moment seller raise the invoice, it will be picked up by the service provider and pass on to the FTA. But after from corner two to corner three, it will move or not is depend on the scenario, case to case basis. Let's move on to back on that. I want to touch base. Yeah, the supply through e-commerce. So what they have also clarified, let's say you're a supplier who sells their product or services through the e-commerce channel, let's say Amazon or Nu or other e-commerce marketplace. So your responsibility to issue the e-invoicing is not with the Amazon, not with the Nu. It is responsible to issue electronic invoice. It remains with the supplier. They already clarified in the recent guidelines. Export one I've already covered. If you're exporting, if there is dedicated ID is there. If the buyer does not have a PayPal participant ID, the supplier need to issue the default endpoint, and this one already been given. Now coming back to the insurance premium, that's very interesting segment. Now in insurance market, how it works is sometimes insurance product also sells by the broker, right? And so in that case, what they're given the option to who should raise the final invoices. So it will also, there is no ready, I would say the answer, it depends on the scenario, who collects the payment. And let's say your broker collects the payment and then your broker, the insurance broker will issue the invoicing to the customer. If the insurance company directly collecting the payment from the businesses, then they will issue directly the insurance premium invoice to the businesses. So there is no ready answer as such when it comes to the insurance industry or insurance premium and claims. One more scenario in the insurance industry is about the brokerage commission paid by insurance company to the brokers. Now, most of the scenario what is happening is the insurance companies raises the invoice on their behalf. In that case, it's dependent on your arrangement of the between insurance company and the brokers, whether the insurance company continue to want to raise the self in billing invoices on behalf of brokers for the commission of brokerage, or there may be another scenario where the insurance broker would say no, they would like to now start raising the e-invoicing to the insurance company. So depending on the between the arrangement, and that's what exactly have been given in the guideline that now insurance company and broker must determine who is responsible for issuing the invoice, and that case to case basis they can determine their processes. Now they also now have given the penalty sometime back. If you don't even appoint a service provider, there is a penalty of 5,000 dirham per month. Failure to issue the invoicing, there is again penalty of 100 dirham per invoice. Even though the credit note also needs to be issued through via system. If it failed to issue the credit note, again the penalty 100 dirham per month. But idea here is not to emphasize the financial amount, but see why to delay and why to bring unnecessary radar from the FTN or businesses. So we request overall the client to please start early and at least we are ready well before the timeline. And most of the our medium to small client, we are also saying if it is okay with you, let's start from the July onward because the July onwards we can start your testing phase as well. So this is the recommended UAE focus e-invoicing journey timelines. So first is now it is already we started now. We should time to now pre-work impact assessment where your ecosystem or your AP AR process, your data quality, your VAT management, IT infrastructures required to be reviewed by the professionals who understand the dynamics of the industries, your economic, business understanding, and then accordingly they can decide where your business or companies stand, what are the currently the gaps, and how to fulfill how to fill those gaps. Because there are various options even when it comes to the ASP selection, your implementation of the e-invoicing solution, where you want to have the solution. You want to on-prem, you want to on cloud, or you want to a private cloud, data security, the cyber security, data going out from your ERP to the e-invoicing partner, and how it should flow, whether it should be flow through the API based, or it is file transfer, Excel based. So there are a lot of multiple factors are involved. So we request all our clients to please start early and at least get that done for pre-work and impact assessment so that we understand where we stand as of now and how much time is required for the implementation journey. Of course, there are 16 plus already the service provider already been pre-approved by the FTA. You can discuss with them, you can design your solution because a lot of automation will come into the picture. You may prefer to have any invoices received by your service provider. So your AP process can be fully automated subject to certain condition or what you call business dynamics, what you design. So all scenarios are possible, but key thing is start early so that you will not face any challenges at a later stage. So this is one more thing we highlight. This project is not a IT project or not tax project or not a finance and economic project. This is something a business transformation project for the big conglomerate. So need to have full dynamics. So involve the all the stakeholder involved because some of the clients they also involve the procurement team, the supply chain management team, commercial team, the sales team. So they all need to understand dynamics of the invoicing and its impact on the businesses because we were discussing about some business scenario with one of the logistic company. So they have challenges is the modification in the invoices, the issue of the handling the debit note and credit note. So how to design a solution such a way. So there are a lot admin work, and we can all can or businesses at least can get the benefit of this invoicing. Uh, One more important point is, as I mentioned again, currently, if you are at a corner floor of buying any services or your goods, there is no option of the cancellation. If your supplier has raised the wrong invoice, only option is the supplier needs to correct it by a credit note. Buyer has not been given at the moment any option to cancel or reject the invoice. So, moment you, as a buyer you get any invoice, the companies are required to acknowledge electronically. Any question we can take it up now. Yeah, Anish Kumar has asked any possible to share. Yeah, we'll share the presentation. No worry. You please share your email address. Ranjana, Razak, nice presentation. Can you share PPT? Yes, we will share. Other than presentation, any other question? Yeah, so we cannot dispute. Yeah, there is no, yes, yes, yeah, you're right. At the moment, there is no option relation, but you can dispute by way of making the call and sending an email. Please correct your invoicing as well. So that's a mechanism at the moment. When it comes to the acknowledgement, the electronic acknowledgement will pass on by your service provider to the to seller as well, but doesn't mean you are what do you call you are accepting it. So acknowledgement go in terms of delivery of the invoices. So that's how it going to work. But at the moment there is no option. You need to call your supplier and ask him please correct the invoice by your credit note and then reissue that invoice. You're right. In terms of the foreign supply providing certain will invoicing requirement, yes, yes, as I mentioned, it's a newly announced. See now there are two different things. If any foreign supplier, let's say the any sort of software company, they don't have any based out in UAE. They are like let's say based in USA or any part of the world, but they are providing this software solution through by way of SaaS model or any other model in UAE. So requirement is they are also now required to issue invoicing. Now, top of that, so they from the moment they start like selling a service in UAE, actually as per VAT law also they require to now register and now they need to issue the invoicing. You're right. In the terms of foreign supplier providing services in UAE, I think I want to make it one more distinction here. Let's say as a buyer, if we are going and approaching any supplier and please provide and we are importing some kind of material services on a case-to-case basis, in that case will be part of the reverse charge mechanism. But at the seller is also like publicly and offering the services here or available or selling the goods online platform, they are now required to issue the invoicing. I hope I made a distinction clear between the RCM versus where the foreign supplier also required to issue invoices. How the invoicing will work for a sole establishment company, since they have only one tier and multiple entities. How the invoicing will work for a sole establishment company in UAE since they have only one TRN and for the multiple. Sir, I think when you go for your MRA portal, I think all of your company would have received now the TIN number. Okay. For e-invoicing perspective, it's already been opened and you already received the e-invoicing number. And so the question here is how it will work. I think one TRN, I think you all the first 10 digit of TRN will become your TIN number and all you receive that e-invoicing TIN as well. If you can just clarify furthermore, if I answer correctly, I mean, I'm not getting how the university work for a small establishment. It will work exactly the same way it will work for other companies. If you're saying, are you saying you only have one TRN is only one T because for the corporate tax purpose, all the company have received their independent number. If purchase and sale is outside UAE, does the UAE entity have to invest? Yes, exactly. Yes, that's I mentioned. That's one of the place. Even you're not part of the VAT registration, you don't have VAT registration in UAE. Still, EU invoicing is mandatory. I think I covered in one of the slide where I mentioned the fact where I mentioned clearly if you are any import and high sea sale business, you are not required to legally register with for the VAT, but your first 10 digit of corporate tax number has become your e-invoicing TIN and that you are required to comply with e-invoicing now. No, you are not required to register for e-invoicing. All the companies who have already got the e-invoicing number, you need to now select the service provider by 31st July if you're part of the phase one. Mr. Joseph, I think I clarify your doubt. Invoicing related to party group or company can also be done given to. Yes, 24 months is an option. Yes, you're right, sir. Until like only 2 weeks back, they have announced this grace period. And this is just grace period, it's not an exemption. And so if you want to apply in early, you can have even for intercompany action, you can apply the invoicing. Early adoption is not an issue. Mr. Pradeep, just if you can rewrite your question, I think if you're not satisfied with my answer, please. So invoicing related party group accounting can also be done. Yes, yes, already we answered that one. Are all business retail and non-retail required to issue invoice? Yes, I think we already mentioned there are only a specific exemption given. Let's say talk about the airline industry, some of the product issue, the services provided by the insurance and banking sectors, and now for intra-group transaction and the investment company, they have the passive income in terms of dividend and the interest. Other than this, all the companies who are into B2B and B2G businesses, they are required to issue the e-invoicing. How will now question from Milonisha? How will e-invoicing work for VAT tax group in the UAE where the tax UAE member are located in different emirates? Doesn't matter. Will the representative member issue the invoicing for all supply or will each individual group member issue the invoicing for supply in the mail? Okay, the first question is how will e-invoicing work for VAT tax group in the VAT where the as I mentioned clearly, see, first question, the answer to the first question, how will invoicing work for bad tax? So there is no group concept here. Each and every legal entity now, I think you already been allotted their e-invoicing TIN number, so they are all required to comply independently. Will the representative member issue the invoicing for all supply, or will each individual group member issue invoice? Each and every legal entity, there is no group concept, sir. Mr. Shah or Miloni. Miloni, I think there is no group concept here. So each and every legal entity now required to issue the invoicing. So Pradeep, as per VAT and current law, all sole establishments should be considered as the single taxing person. In this case, all sole establishment under one person owner should have one PayPal ID like wedding. In this case, all the sole establishment under one person owner should have one PayPal ID. Unlike VAT and CTR. If you have one VAT and one CTR, yes, you will have one PayPal ID. Yes. If petty cash expense related to B2B transaction can also consider emergency. Yes, that's very. See, uh, at the moment, there is no like lower limit as defined by the FTA in that we just saying that more than 50 million and below 50 million. Let's say if you're buying it something, let's say whether outside from the grocery shop down there and are they really required to issue the tax invoice through our e-invoicing? At the moment, yes, if as long as they follow either phase one or phase two. But idea is there might be some sort of a relief from the government, maybe the $100,000 or $200,000. They may not require a small vendor, may not require to issue the invoicing. But when we talk about the petty cash expenses at the moment, if it is like you buy some stationery and it's a big shop and they have turnover more than 50 million dirham. Definitely, and it's a B2B transaction, your stationery service provider, though it is petty cash expenses, also required to issue e-invoicing. See, broad idea is they want to automate the entire ecosystem. So in the going forward in the future, businesses may not require to file the VAT return. What's going to happen in the future when the entire ecosystem will bring into this e-invoicing mechanism? The companies and the businesses will get the email confirm kind of from the FTA. These are your VAT number. These are your transaction details. Are you okay? And then click a button. We can file the return. Time will come for that as well. Uh, Praveen, I hope I answered your question. Thank you, Pradeep sir. Shahil, I think we covered most of the question. Any further?
Yes. I think we've covered all questions there. Any other questions? Please feel free to drop in the chat box.
Thank you, Rehman. If I ask you the all, if you, I mean, I think I'm to understand. So, have you already started doing some discussion about e-invoicing, or you already at an advanced stage? So what is the because still, when we meet the big corporate house, some of the corporate house really taken a very how to say, proactive approach to implementation, and some of the small to medium organizations still they are don't know how to start with it. So I'm not sure the how the Sahil, you've been dealing with a lot of clients. So what's your feedback coming up from the client? What are the major challenges? Any take on it? We have few more questions. Only transaction, only VAT are required for all administration. No, sir, only VAT transaction. No, there's no link between VAT regulation and direct when it comes to the EOE invoicing. It's much beyond. Even if you are not VAT registered company, e-invoicing would be applicable as long as that invoice is required as per the UAE mandate. I have already discussed the exemption. There are certain exemption given to the airline industry, non-banking financial banking companies, the insurance companies, and now intragroup also exempt for the 24 months, and investment holding company. Apart from that, as long as any entity issuing the invoice from the UAE, they are required to comply with the UAE invoicing mandate and regime. I hope Vijay you got an answer. What are the key challenges organizations should artificial when integrating university requirement registering ERP system, particularly maintaining and compliance without disrupting? Uh, okay, in terms of technical challenges, the ERP is still see there are a lot of hot questions still to be answered. It's a risk appetite to organization, such as first is whether organization is really open to pass on this detail to the service provider, right? So how the kind of data security, where do you want to really implement a software? Is it like going to be on premises or the cloud? And the second is your how the database is currently maintained. Is there because a lot of project what we're getting in at the moment is about the master data cleaning. The data is maintained by very small and medium companies. They're still not in the shape which can use for the invoicing purposes. So these are some technical challenges which various organizations still facing it in terms of the data quality, the readiness, preparedness, and change of the then one more is the change management kind of change of the processes. Your EAR or AP process currently what an organization is adopting and it has been using for the many years, they may now require to change the way they are issuing the invoice or recording the AP invoices. What about individual license freelancer, how they are being looked at? Yeah, I think we mentioned when the Uh, so the answer is lines. You have got any kind of TRN number or you got any VAT number already for this your freelancing services? At the moment, C2B, C2G is not part of the invoicing mandate because at the moment C2B, C2G, and C2C is not part of the invoicing mandate as per the recent guideline. Right? I would like to know how Premium Brand can support business in the transformation you investors. Yes, Pradeep, we can discuss separately on that. If you can give us your contact detail, we can discuss separately on that. But that's just to, I think, already mentioned, Premium Brace is now implementing like a lot of e-invoicing project. So what we're doing at the moment in terms of the impact assessment gap analysis, we are working about technology partner to review the both the ecosystem or the taxation side of it, the VAT management and how to set up a correct test logic mapping to ensuring that we are all fully compliant with when e-invoicing kicks in. So that's where we are helping and we're working with a technology partner. So seeing that the high entire business process when it comes to the EAR, AP, VAT management uh, is fully ready and if any alignment is required, so we are working with the on the dot aspect in terms of the change in the processes and VAT management and and technology side of it. So that's where we are helping our businesses for the impact assessment gap analysis, coming out with a comprehensive report and what are the action plan I would make for them to implementing the e-invoicing. All right, I think we don't have any further questions. Sahil, I think we covered everything. Any further question?
Yes, yes, we do have a couple of minutes left for the webinar. We have covered all questions. I think circling back to the question you asked me, so that what are the burning questions currently I am getting from the clients? It is really in line with the questions we've received today. A lot of clients are, correlating VAT and e-invoicing, where the idea is actually keeping them separate. E-invoicing is a different, ball game altogether. And right. Also, Mr. Moin asked about the key challenges. I think it is very important to start early and really introspect and really see where the current ERP stands and how the database is currently looking like, because all the current database relating to suppliers, relating to clients, the TRN is updated, all details are updated. I think starting early will really help to have a clean database, and that's how I think without disrupting the whole financial workflow, it will really help to do a smooth transitioning in this whole invoicing project. Other than that, I think we've kind of covered all questions, sir. So
All right. Aishwarya, you want to share something? Final, any challenges you're getting in?
Sahil almost covered everything. So yeah.
All right. All right. So thank you everyone for patiently listening and for all your good questions. So the presentation and the recording would be available on the Premium Branch channel, and you will get shortly. And thank you very much, and we'll catch up soon about next webinar shortly. All right. Take care. Thank you everyone.
thank you, everyone. Take care.
Thank you all.